Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. The South Korean economy is facing intensified headwinds, both at home and abroad. The $1 exchange rate has surged past the 1430 mark for the first time in 5 months, reigniting concerns over currency volatility. And at the same time, the KOSPI has rallied to a new record high, while gold prices also continue to break ceilings. The housing market, meanwhile, remains overheated, prompting the government to prepare yet another round of real estate measures. So with the BOK's October rate decision just days away and only one policy meeting left before year-end, authorities are under pressure to balance inflation control with economic stability. For a deeper discussion on this, we connect to Kim Mok-yeon, professor at Seoul Business School. Welcome, Professor Kim.
Thank you for having me.
And also joining us is Kwak Jun-hee, assistant professor of economics at Seoul University as well. Good to see you.
Thank you for having me.
So let's start a discussion with Professor Kim. Mounting concerns over renewed U.S.-China trade tensions recently pushed the $1 exchange rate past the 1430 mark. And this sharp depreciation, of course, is grabbing a lot of attention. Professor Kim, what do you think are the key drivers and the underlying causes behind this continued trend?
I would like to emphasize the cause of uncertainty because of the trade war between the U.S. and China, of course. And in addition, there is so basically where the agreement between the Korea and the U.S. between the tariff issue was not solved yet. So they want to talk about those kind of like how much dollars that we have storage in Korea. And they also mentioned about like the cash investment in the U.S. from Korea. So a lot of issues going together and they combine each other, and it's going to increase the uncertainty toward the global economy. So we worry about the Korea's economic situation, including those kind of uncertainty. Well, maybe it's going to trigger up the depletion of the U.S. Depletion of these kind of situations.
Mm-hmm. Then let's all move on to the outlook as well. Many in the market actually anticipate the high exchange rate will continue for now, although there's still room for changes, of course. Professor Kwak, do you see the won's trajectory? How do you see the won's trajectory moving forward? And what factors do you think could swing the value of the won?
Right. But there is always a lot of uncertainty in the path of exchange rate. First of all, regarding the geopolitical tension, it seems market get used to those shocks from U.S. tariff policy and associated geopolitical tensions, although there will be ongoing shocks to the market. But I think the problem is recently Korean won depreciates while U.S. dollar also depreciated, but the Korean stock price index, KOSPI, is rising. So this shows that U.S. policy might not be a critical factor for now. So even though the Federal Reserve will cut their interest rate later, maybe that will not contribute to the appreciation of Korean won. So I believe the exchange rate level now will be, I think, remain for a moment, or it will be a little bit higher than that. The reason is that I think it seems investors are worried much about inflationary pressure in Korea because Korean government is expanding their fiscal deficit to a large extent. It means investors might lose their confidence in Korean currency, and our Bank of Korea policy rate is around 2.5%, much lower than 4.25% in the U.S. that contribute to the fall in the demand for Korean won.
Mm-hmm. So it does seem like domestic factors are also playing a big role in this. Now, let's shift a little bit to trade risks. So the deepening U.S.-China conflict and China's export controls on key raw materials are also expected to significantly pressure Korean firms as well. Professor Kim, how might these restrictions impact local sectors, and what kind of countermeasures do you think should be, prioritized?
Those raw materials are very critical to manufacture the semiconductors as well as the electric vehicles for Korean economy. And when we going to deal with those kind of kind of like a monopoly on those kind of materials by China, basically that we have to ensure the another pipeline from like Australia and other countries that the nations that can generate those kind of raw materials. And of course, the US is trying to do that too, but those kind of issues can create a lot of problems, such as like disruptions in supply chain, and which can which can have a high cost for those manufacturers. So Korean government, of course, they're trying to make sure that we diversify the raw materials pipeline, and of course, we're going to work together with other countries such as the U.S. so that we can prevent those kind of disruptions in our global supply chain on those key manufacturing companies.
Right, so diversification could be a great solution as well. Now, let's also touch upon the stock market. So, despite external headwinds, the KOSPI surged past 3650 mark during intraday trading, hitting another all-time high once again. Professor Kwok, what are your expectations for the KOSPI's direction moving from here?
Right. So I believe recent rally of KOSPI is contributed by low level of KOSPI so far, and also improvement on industry prospects, including semiconductor sector in Korea. And I think we are on KOSPI will rise a little bit more. I think mainly due to the industry. Improved prospect on semiconductor sector or shipbuilding sector and so on. So let me explain a little bit. So first of all, KOSPI was very low compared to other competitors like Japan. So now it seems global investor realizes that Korean stock prices are low compared to other countries. So they are trying to arbitrage and make profits now. So and moreover, because Korean won, the US dollar exchange rate was high, it means it provides room for foreign investors to obtain currency gains as well.
Right. So,
Second, yeah.
Go on.
So US-China tension also provide opportunity for Korea, I think. For example, China wants to build their own semiconductor system, and US tech companies, make a lot of investment in AI, and Korean firms, they provide semiconductor to those firms in China and US, and I think that can be a very good factor for KOSPI to rise again.
Right, so a lot of factors weighing in, and it's definitely a big milestone for the KOSPI, but sustaining that, we'll have to see. Now, let's look at asset trends. So not only stocks, but also gold prices have been reaching, historic highs lately. It's quite rare to see both a risky asset and a safe haven like gold rising at the same time. Professor Kim, how should we interpret this unusual dual rally?
I think investors are showing two different approach to increase of the assets, because like we have a strong liquidity in the market, and instead of going into the real estate market, our cash, basically our investment is on liquidity. On the other hand, but we are not sure basically not about the directions of our economy. Economy is growing, or like it's going to downturn. Therefore, they're gonna make investment on gold as a safe asset. So basically, they're trying to hedge between the stock and the gold, so that they can they can minimize the risk on investing their money in uncertain market.
Right, so this volatility definitely it's affecting investor sentiment. So on to real estate policy now. So in response to this overheated housing market in Seoul and the greater metro area, the government has announced aggressive measures, including a major expansion of regulated zones and tougher lending rules as well. Professor Kwok, how effective do you think would the latest measures be?
Right. So as you mentioned, they implemented very strong and surprising regulations, especially land transaction permit system is extended to all Seoul area and some of Gyeonggi-do. And I think these policies are likely to mitigate booms in housing markets for a moment, and we will observe reduced transactions. However, I think there will be some unintended consequences of such surprising strong regulations. Because, you know, Koreans are very smart and we have expectations regarding the future path of policy. And in response to more strict regulations, people might think that the government take actions because housing prices will rise further. So people get some information from the policy itself. Or they think this is the last time to purchase house without or relaxed loan regulations, which leads to panic buying. So I believe that to cool down the market, fundamentally, we need substantial amount of housing supply, which can change expectations of people.
Right, definitely. Now that you pointed out, it does seem a little bit concerning that people would read into the latest policies. We'll have to see how that reaction would follow. Now, let's also touch upon monetary policy. So ahead of the Bank of Korea's rate-setting meeting next week, market watchers are leaning toward a possible rate freeze. Professor Kim, do you agree with this outlook? And what's your take on the BOK? What do you think they should consider the most critically at this point?
Well, it's not easy for us to make a prediction on the rate, but I expect a rate freeze because inflation is still going on and our economic growth is not, maybe basically it's slowing, and our exchange rate is not stable. So basically, our central bank, what they're gonna have they're gonna have a very careful approach regarding our financial stability, and they're trying to avoid those kind of move that could destabilize our currency won. That's my expectation.
Okay. Then let's focus on the year-end decisions as well. So following this month's meeting, there will be another final rate-setting meeting on November. And in August, the committee reached a near consensus on a single rate cut before year's end. Professor Park, what's your projection? Kwok, what's your projection for the final interest rate level for this year?
Right, so I share a similar view with Professor Kim. It's very difficult to predict interest rate. But okay, it depends on incoming information, I think, and given the high level of exchange rate and rising housing price, it's difficult for the Bank of Korea to cut the interest rate. Since then, it will cause depreciation of currency and give signal to market that we can see further rise in housing price. Thus, it is not likely that the Bank of Korea will cut the policy rate at the end of this year, even if the U.S. Federal Reserve cut their interest rates. So we are not gonna follow the path of U.S. interest rate. However, another possibility is that if GDP growth shows further slowdown of the economy and increases the possibility of recessions, then I think they're gonna cut their interest rate at the end of this year.
So this last final meeting could really set the tone for what's coming ahead. Now, before we let you go, top officials from South Korea are headed to Washington. We here today to discuss the details of the trade talks with their counterparts. Do you think the two sides would be able to reach a more concrete agreement this time around, Professor Kim?
I think they're gonna reach some details regarding their, especially for currency swap, because we are expecting have to like a fully unlimited currency swap between the US and Korea. But based on those kind of investment, like a $350 billion US investment package, well, I think we're gonna reach some agreement for the details, including some partial conditional agreement in currency swap, so that we can finalize those kind of the investment deal from the Korea to the US.
Right, that's quite an optimistic view. We also want to hear, Professor Kwok, what about on your side? Do you have any thoughts on this?
So I didn't prepare my answer to this question, but I hope we can reach a possible deal so that we solve the problem in the foreign exchange market and associated concerns. Yeah.
Right, of course, definitely. So we will hope for some concrete results in the coming days. Gentlemen, thank you so much for your time and for your insights tonight. Professor Kim, thank you so much.
Thank you.
And Professor Kwok, we appreciate it.
Yeah, thank you so much.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.